Hello folks, this is David Schlossberg from Assured Concepts Group with our Educational Economic Update for the month of February 2019. In this month's video, I'll discuss some of the major headlines that influenced the markets in January, and I'll provide insight into what those developments could mean for you as an investor. January 2019 is behind us, and what a difference a month makes. By the end of 2018, the S&P 500, the Dow, and the NASDAQ posted their largest annual declines in years. In fact, the S&P 500 and the Dow experienced their worst December results since 1931. Fast forward a month, and momentum has swung in the opposite direction. The S&P 500 added 7.9% and the Dow was up 7.2%. These gains mean both indexes had their best January performances in at least 30 years. The NASDAQ increased 9.2% last month, which was its best January since 2001. These gains occurred despite the longest government shutdown in history continuing for much of the month. Why did the markets rebound in January? Well, a few details helped change investor sentiment, including the Federal Reserve comments and corporate earnings season. In December, concerns about how quickly the Fed was raising interest rates contributed to market declines. By January, however, the Fed officials indicated several times that the central bank would begin taking a more dovish view or start slowing the rate increases. The Fed also chose not to raise rates after its most recent session, saying it will be patient, quote unquote, when deciding on future increases. Market confidence grew, knowing that the Fed isn't rushing to hike rates again soon. Corporate earnings season also largely affected stock performance. By January's end, about half of the S&P 500 had released their fourth quarter results. The data reinforced that corporate growth had slowed later in 2018, but it offered no new surprises. Instead of driving market losses, however, January's earning releases contributed to market growth. Why? Well, this happened in part because a few solid reports from large companies helped ease investor worries about a potential recession. In February, the remainder of corporate earnings season is ahead. Both global growth and the ongoing trade discussions between the U.S. and China may also remain on the investors' minds. Further, we should receive some delayed data which was postponed because of the government shutdown, including the first reading of fourth quarter gross domestic product growth. In the weeks to come, we'll be monitoring these and other details, and we look forward to sharing these new perspectives with you as they arise. Well, that's it for this month's Educational Economic Update. And please remember, as always, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, as always, give us a call at 847-426-1077. We'd be very happy to talk to you. Once again, David Schlossberg with Assured Concepts Group, signing off for the month of February 2019. Thank you and have a great winter.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.